Hey guys, how's it going? It's Andy from Magoo Investing. Happy Wednesday. As we get towards the end of April, which is just kind of shocking to think about, I feel like March took forever to go by and then April just went by extremely quickly. I don't know if I'm finally getting into a routine, but May starts this week, which is crazy to think about. And pretty much every month, I have two videos that I make. The first one is where I talk about my current stock portfolio and talk about the changes that I've seen in my own account in the past month. And so I'm going to be waiting to post that until next week because I'm still waiting to add a couple stocks to that portfolio. But the other video I often make on a new month is the top stocks that I'm looking to buy in this upcoming month. So here's today's video. I'm going to be talking about 4 stocks that I'm looking to buy in May 2020. It actually would have been 5 stocks, but the 5th stock that I wanted to talk about, I was so excited about it and I wanted to get the video out before earnings. And that's why I made my video yesterday talking about SBUX earnings, which would have been number 5 on that list. So if you missed yesterday's video about SBUX, I'll leave that as a link above. So the criteria for picking stocks for this video is I specifically wanted to look at tech stocks. And the reason behind that is if you look at the overall market, the tech sector has been the one that's primarily been pushing the market up. When you look at a lot of the other sectors, specifically energy, travel, stuff like that, they've been pulling the market down, but the big hitters or the blue chip stocks in the tech industry have been pulling the stock market up. When I made my video on Monday talking about where I thought the stock market was going to go, I identified this week as being a very important determining factor of which way the market was going to go. And the reason behind that is that there's a lot of big players releasing earnings this week. In that video, I talked about 5 reasons that the stock market continues to go up when the rest of the world seems to be showing signs that things should be going down. And I identified until we see some very tough numbers coming from a lot of these major tech companies, I expect the market to go up. And today we saw some earnings, especially from Google, that looked very positive. And as bad as it makes me feel, I think I am officially bullish on the stock market again. Although every sign is telling me that the market should go down, but based off the fact that Google had positive earnings today and the stock climbed around 8% after hours today, I am finally bullish on the market. So now I'm going to identify the 4 stocks I'm looking to buy in May of 2020. Before we get started, I gotta say that I'm not a licensed financial advisor and this is not financial advice. You should do your own research before making any decisions about any investments going forward. Also, if you've been enjoying the videos on my channel, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Now let's get started and talk about the 4 stocks that I'm looking to buy going into May 2020. First up, I wanted to talk about Apple, ticker symbol AAPL. Apple has been on my radar for a long time. Growing up, Apple has been one of the most recognizable companies for my entire lifetime. And I had a chance of owning it when it was below $200, and I think I bought it at $190 and sold it $225. Currently, the Apple share price is sitting around $278, and it's been really interesting to see how it's recovered and moved in the past couple years. Looking at how the stock price has moved so far this year, it is sitting down 5% year to date, which is kind of surprising, especially when we talked about some of the companies like Amazon that have been doing very well, being up almost 30% year to date. But the more we look under the hood for Apple, you can see some signs that make a lot of sense for why the share price is still below how it started the year. Similar to the video where I talked about how SBUX is one of the first companies to come out and talk about the potential impacts of coronavirus, that was at the end of January. Apple was one of the first tech giants to come out when they made an announcement talking about the potential impacts to their supply chain on February 17th. And so being one of the first major companies to ring the alarm bell, it's going to plunge the share prices because that's kind of the first sign that this is going to be really serious. Are there any reasons why Apple could be more or less impacted about the virus than a lot of these other tech companies? And kind of the main reason that I'm identifying is the fact that they're getting hit twice by the impacts of the virus. Looking at China as an important region for Apple production, they've talked about how they're having a lot of problems with their production chain. And so they're not being able to produce as much stuff as they normally would want to. Also, China is one of the larger markets for Apple products. And so the lockdown and how long they've been kind of fighting this virus could be a huge impact going into earnings. I've been saying this for a while on this channel. My main thing that I don't love about Apple is their reliance on the iPhone for their revenue. While Apple is this massive company, I don't love the fact that 55% of their revenue comes from one source. And it's a source that's looking like it's going to be taking a hit with this earnings season. Pretty much every article I read talking about the potential impacts of their earnings report has identified the problems and some of the worries that people have with the production and sales of iPhones going forward. So if the demand in China and the supply chain is having problems, I expect to see a pretty big hit to revenue if this is actually the case. Looking on a more positive note for why I actually really like this company is I love how well they've been doing with their wearables and especially their AirPods. While it's currently below 10% of their overall revenue, I expect to see that increase in the future. And then when you look at other aspects, especially their overall services, making up around 17% of their revenue, that's getting closer to kind of evenly distributing the revenue sources for the company. So overall, I do want Apple to be less dependent on iPhone sales to have a solid quarter. And if we see some tough numbers because of the result of China really impacting their production line and their demand for iPhone sales, I expect the stock to fall. And if that happens, that's why I'm going to be looking to buy. Apple is a company that I would feel comfortable owning at pretty much any price, but I'm expecting to see them miss expectations with their earnings this week. Also going along with the fact that I hate buying before earnings because I've been burned too many times buying right before the report, having the stock fall, and then just thinking that I could have gotten the stock at a 5% discount, but I didn't. If the stock price does fall like I kind of expect it to, I'll be looking to take a position in the company for a long-term investment. Let me know what you think about Apple stock in the comment section down below. Next up, let's talk about one of my favorite companies in the entire world, and that is Microsoft, ticker symbol MSFT. Looking at Microsoft's share price, it's sitting around $172 and it's up 7.5% year to date, which is very impressive considering the rest of the market is down. Since I made my last portfolio video, I have actually bought some shares of Microsoft because it was just too juicy to see the stock price fall, and I ended up buying a couple shares, and I'm currently up 10.5% on my investment so far. So what made me look at Microsoft stock and determine that I wanted to buy it for a long-term investment? And I've talked very well about this company in the past, and seeing the incredible discount that we've gotten, it was kind of too much for me to pass up. And the most attractive thing for me about Microsoft stock is their incredible distribution of their revenue sources into 3 areas. When I make this video, it's going to be a very interesting day for Microsoft because they're expected to announce earnings after the bell today. So I'm making this video before I see those numbers, and I'm seeing people slightly worried about what's going to happen. Similar to the news stories that we've seen with Apple, Microsoft has been talking about the problems that they've had in their supply chain and how it's not getting up to 100% as fast as they were expecting. However, unlike Apple, Microsoft's physical sales are not the main part of their revenue source. Compared to the 55% that they make from the iPhone sales, the max amount that Microsoft makes from any one area is around 35%. In the past videos, I've talked about how I love the equal distribution of revenue sources for Microsoft. Looking at their 3 revenue sources, you have the personal computing, you have the business side, and then you have the cloud. Even if we think that the physical hardware sales for Microsoft are going to dip, there's been a lot of expectations that their cloud services are going to be pulling up the rest of the weight that could be falling off from the drop in sales. When you look at their cloud aspects, they are second in the world behind only that giant logistical monster of Amazon. And from everything I've seen, people are expecting to see drops in their personal computing revenue, but they're very curious to see if the cloud services are going to be able to pick up the slack. So that's what people are going to be watching with earnings report. And if the stock does fall as a result of earnings tomorrow, I will likely add a couple extra shares to my portfolio because it is too good to see Microsoft go on a discount and not add to my portfolio. So let me know what you think about Microsoft stock in the comment section down below. The third stock I wanted to talk about as being a potential buy for May of 2020 is Activision Blizzard, ticker symbol ATVI. Compared to the 2 giants that I've started with in this video with Apple and Microsoft, Activision has a lot more risk and is not as stable as these other 2 giants, but that is not deterring me from adding to my current position. So yes, I am a shareholder and I plan to be for the foreseeable future. When you look at the video game sector, it has outperformed the market very well. When you look at the 3 main companies in the video game sector with Activision Blizzard, EA, and Take-Two, they have done very well, and I expect to see that in the future. It makes a lot of sense that these video game companies are doing very well. As people are stuck inside, there's not a lot to do, and video game demand is at potentially an all-time high. One of the main reasons that I love Activision as an investment is that they have shown how good they are at keeping players on their games for years after release. You look at the World of Warcraft that's been around for over a decade and it still has a very solid user base. You look at Overwatch, it has been around for a couple years. And when you look at their monthly average users, it has declined for a while. In 2019, we started seeing an increase. That kind of aligns with the share price that bottomed out at the very end of 2018 and beginning of 2019, and it has steadily increased since then. One of the things I'm really looking forward to is going to be the release of the next generation consoles. And unlike GameStop, which I don't think is going to be able to survive long enough to take advantage of that, Activision is in a perfect spot to take advantage of it. In the past 12 months, Activision has been very active in releasing new content, which is kind of strange for them. They've released WoW Classic, they've come out with a new Call of Duty, a Call of Duty mobile game, and then they finally come out with Call of Duty Warzone, which is a free-to-play game that my roommates have been loving. So that's kind of my scouting report, seeing that I expect a lot of great things to come from that game. From COD Mobile and Warzone, the company is expected to bring in $500 million in profit from that. and then you put that into account with their other free-to-play massive game of Candy Crush that's expected to bring in $1.5 billion in revenue, you can see some of these revenue streams increasing in size. And so one of the reasons that I love Activision compared to Take-Two and EA, they have revenue sources that they have shown that they can continue to pull money from even years past their release. In past videos, I've talked about how I love the potential for Activision Blizzard to take advantage of the expansion of esports. And while that's kind of on a hold right now, that is still my long-term goal for the company. And so while people are staying inside and playing more video games, the esports aspect is the area that I'm most excited for. So I'm going to be waiting for that. And if the stock price moves in the next couple weeks, I expect to add more to my portfolio. The main thing I'm really waiting on is for my tax return to come in so I can add that into my investment account. So let me know what you thought about Activision Blizzard in the comment section down below. The last company I wanted to talk about for my potential buys for May of 2019 is Intel, ticker symbol INTC. When you look at it, it's only down around 2% year to date, and it's currently sitting below $60. And so I see a lot of potential with this company, but out of the 4 companies I've talked about in this video, it's probably the one that I feel the least strongly about. Looking at the sector as a whole for the microchips, you've seen some kind of mixed results. Texas Instruments came out with their earnings report last week, beat expectations, and that pulled the whole sector up with it. But then AMD announced earnings today. They met their expectations for earnings, but provided a weak guidance for the rest of 2020, and that pushed the stock down. I'm kind of seeing some mixed information about the sector. So let's talk about what I see specifically with Intel over the other 2. One of the things that pushed AMD stock down today is that they talked about they expect to see the demand for personal computers to drop in the next year. And so that pushed the stock down. Intel, on the other hand, does not have as much reliance on the PC and chip aspect as AMD does. When I looked at the revenue sources for Intel, I saw a heavy reliance, more than 50%, on cloud computing data centers. And so they're providing the equipment for that, and they're not as reliant on the consumer products as something like AMD. Also, doing research for this video, I constantly saw the price targets for the company sitting around $70. And going from below 60 to above 70, that would be a very nice return for me for a long-term investment. Also, when I look at the history of the company, it has been outperforming the overall sector for the past 2 years, and that type of history in price movement makes me feel very good in this time of uncertainty. Also, probably the biggest thing that I saw from their earnings this past week is that their revenue from their data centers was up 34% year over year, which is an astounding increase for a well-established company like Intel. And as I talked about in yesterday's video for SBUX, I'm starting to put more of a weight into looking at the free cash flow of a company during this uncertain time. And Intel has been very good at increasing that over the past year. They currently have just shy of $3 billion in free cash flow, and that's a 75% increase year over year. So they seem very well set up to survive this crazy time. And so after reporting not ideal earnings from this last week, I'm not having that push me away from the stock in the slightest. I'm still very bullish on Intel. And if the stock moves in any way or my tax return finally comes in, I'm looking to add Intel to my portfolio for a long-term position. So let me know what you think about Intel in the comment section down below. Thanks for watching this video. Let me know what you thought about my 4 top stocks to buy for May of 2020, and let me know if there's a different stock that you're watching to take advantage for during this crazy time. Let me know in the comment section down below. Thanks for watching, stay inside, and I'll see you in the next episode.